in line with street expectations, but the bigger, delta that came in this time around was the acquisition. The acquisition actually literally spiced up this quarter for the company, which was otherwise bland in line with street expectations. We do have with us Mohit Malhotra joining in, the CEO of the company. Thanks a lot, Mohit, for joining in. The first question, of course, is with regards to the acquisition. You said that you will acquire 49% of Badshah over the next 5 years. So just wanted to understand, is there a valuation locked in for acquisition of that 49%? And now that you've gotten it into your fold, 250 crores is what you're expecting it to do with FY23. What does Dabur scale this business up to? I mean, you have a much higher distribution, a much bigger sales force. So how much can you scale this business up by?
All right. So, Mangalam, thanks for having me and wish you all a very happy Diwali and season greetings. Yeah. And I think the results are pretty much in line with the street estimates and to our estimates also. So we were pretty excited, even without the acquisition. So, but on the acquisition, I think first is valuation definitely is locked in. So the multiples that we've given them, which is around 4.5 multiple on top line and around 19.6 multiple on the bottom line, that stays at the end of 4 years also when we acquire the 49% stake, and that's all actually been locked in. So after 5 years, we acquire the balance of the company. And in the interim period, we leverage the synergies from each other's strengths, which is sticky relationships which are there in this masala category, which the promoters have. And that's why we have the promoters staying with us for next 5 years, so that there's an easy, smooth acquisition process which actually happens. And they, to your point, they've already done a 250 crores is the estimate for the current year. And we expect the business to grow at roughly around 20% CAGR and take the business from 250 to a level of around 700 crores in next 5 years' time.
All right, level of 700 crores in the next 5 years. So that means that, at the same multiple, you will perhaps have to eke out 2,500 crores in terms of acquisition for the remainder 49%. We'll talk about that in just a bit. Also wanted to understand the margin synergies, because currently they do around 23%, and this despite 82% of their revenues coming in from blended. That's a high gross margin business. So going forward, what kind of margin synergies can you eke out from this business, say in the next 4 to 5 years?
See, there are a lot of upsides in the margins which can be gotten, from distribution, because there are distribution margins which this company has been operating for so many years, but nothing in knee-jerk. Gradually and slowly we will try to rationalize those margins. Plus there's the distribution in terms of rural that we'll have, plus they operate through multiple levels of intermediaries, which also we will try to delayer that organization. The retailer margins, the stockist margins are also a little bit on the higher side as compared to what Dabur operates, or what the category at large actually operates in. So, but no hurry. So we will get those margins also rationalized. The second item is the raw materials that we purchase as Dabur and they purchase a 50% commonality. So as the scale of purchase goes up, there will be economies of scale kicking in, and that will also bring in a lot of synergies and cost cutting. Plus media. The company has not been doing a lot of media and demand building in terms of advertising. And Dabur is used to doing advertising, and we have some set deals and ways, systems, processes by which we buy media. So there will be a lot of synergies in terms of media processes also. And then the other strong management practices and processes which we bring on the table, we think will unlock cost efficiencies there also.
Right. Mohit, sorry to come in on this one. Mohit, just wanted to understand, what is the gross margin, EBITDA margin differential in Badshah? I mean, if it's doing 23% EBITDA margins, just wanted to understand what is the gross margin that it is doing right now?
So almost around 40% is the gross margin.
So 40% is the gross margin they do with 23% EBITDA margins. 45% is the gross margin 50% is the gross margins that you do with around 22% EBITDA margins. Is that the way one should look at in terms of synergies for Badshah as well? I mean, can you realize some 300, 400 basis points from where we are right now? Can you give us a number?
Yeah, not exactly that number, but yeah, definitely around 100 to 200 basis points can be derived out of the synergies, but that will be plowed back into the media, because the media, if you look at their business, the media investments have been very low. So we want to do brand building, and we want to extend the brand across geographies. So whatever upside that we will get in terms of operating margin, that will be deployed back into media to grow the business to the level that I mentioned of around 700 crores.
All right. Hi, Mohit. Nigel on this side. Congratulations on this acquisition. Quick question. You were talking about scaling the business to 700 crores in the next 5 years. So just to put in the numbers, for the remaining 49%, you'll be spending something around 1,500 crores. I'm going by 4.5 times price to sales.
That's right. That's right.
So around 1,500 crores, right, is what you'll be paying for the remaining 49%.
But these are the estimates of the growth numbers. So yeah, the numbers stack up like that. Yeah.
So this 1,500 crores that you would be paying for the remaining 49%, how do you plan to sort of fund it? Will it be from internal accruals? Would you look to tap the market at any point in time?
No, Sonia, we have enough money lying in our balance sheet. We got 5,600 crores which is lying in our balance sheet. Okay. So no debt to be raised here. So all will be internal accruals, and the money is already there, which was parked for these acquisitions only.
Since we have you with us, how is the domestic volume growth looking? I mean, what is the kind of trend that you're noticing now that the festive season is also upon us? In Q2, I mean, you've been for the last 2 or 3 quarters in very low single digits. What is the growth looking like?
See, if you actually look at the transaction volume growth that we actually do in terms of eaches and the pieces that we sell to consumers, more consumers, our volume growth actually has been around 14%. But that was more driven by our foods business. And therefore, the moment you value weight that volume growth, it turns out to be around 1%, which is looking very, very modest to you. But if you look at the CAGR for past 3 years, our volume growth has been in the range of around 9% on. And we expect to maintain that case sale volume growth already, because sometimes some part of the portfolio fires and sometimes it doesn't fire. Like this time in Q2, our healthcare was subdued, which is a high value, and that's why the volume growth is looking subdued. And the foods did brilliant. Our foods volume growth is around in the range of around 30% odd. So that fired, and that's why the weighted average volume growth looks to be muted at around 1%.
Okay. All right.
But broadly, we are pretty optimistic on the volumes going forward also, except for the high hump of the healthcare business, which is what we are lapping over.
Okay. All right. So two-part question then, Mohit. For the past quarter, there's 21% growth in the home care business sequentially. Was there any one-off out there? So that's point number one. The other factors, you briefly spoke about the health supplements and OTC business. For Q3, are we likely to see double-digit growth on a year-on-year basis on the high base?
Right. So first on the home care business, Nigel, we've registered a 21% growth. There's no one-off there.
Okay.
Our Odonil brand has actually performed very well, and that has grown by around 27%. And Odomos brand has also grown by around 20% odd. And Sanifresh business has also done pretty well for us. And there's been a market share increase of around 350 basis points, which happened on Odonil. So no one-off. On the second piece of health supplements, we don't expect it to grow by double digits at all in health supplement, because we are navigating a very high base. The CAGR is double digit of around 11 of 3-year CAGR if you see pre-COVID to now. So we have a CAGR of around 11-12%. So we will expect a very muted growth in the health supplement business going forward also, because of the high hump of the base which is there.
Right. Mohit, just to reconfirm your numbers with us, you had earlier given us a guidance of double-digit revenue growth, low double-digit revenue growth with mid-single to high single-digit volume growth for this year. Does that stay with around 19 to 20% margins, or have you made any changes to those estimates?
You see, 20% margin remains. That's the guidance. Around 20% of operating margin is which we'll maintain. In terms of the volume growth, I think volume growth will be low single digit, because there's a price increase. The growth in all the categories are actually muted. So we're looking at a high single digit value growth with a low single digit volume growth.
Right. And what's interesting in Dabur over the last couple of years is that you are looking to enter newer markets. Just wanted to understand how the performance of your earlier launches, you entered baby care, etc., have been, and what's the total addressable market or TAM that you're looking to tap into going forward? What's your current TAM?
See, in terms of the food business, we've increased our TAM from existing 1,700 crores to something like around 10,000 crores. And now we are looking at entering the carbonated food drink markets also, which is also huge, and the source of business here becomes carbonated soft drinks, which is a 40,000 crore market. And our drinks, new product launches have done very well for us. We launched it around 2 years back. This year we'll be exiting at around 200 crores. The next 3 years we should be reaching around 500 crores with our drinks portfolio. So that is how we are actually expanding, and that is beverages. Now if we move to food, we've already entered into pickles and chutneys, and now we've done this inorganic acquisition of Badshah, wherein the TAM increases because spices and condiment market is around 25,000 crores, out of which the blended market itself is around 12,500 crores, so that really gets extended. Plus, we've also gone into ghees and oils. So TAM is actually gradually, slowly increasing for us in most of the respective categories where we are present in.
All right, and the final question then, with regards to the capex that you've announced along with numbers as well, 326 crore is the capex that you announced in both your juices as well as the toothpaste business. How much could that mean in terms of incremental revenue for you going forward? So
we're looking at, with this capex, around 900 crores revenue in 2 years' time. And therefore, we have an IRR of roughly around 40-45% coming out of this capex in the Indore factory facility that we'd already invested in the greenfield of 500 crore earlier. So that's why, because our food business is the demand is outstripping the supply. That's why there's a necessity to actually put this capex much in advance for us. Yeah.
Okay, you're doing so much, Mohit. There's the carbonated soft drinks market, there's the spices market, and you have cash on your books as well. Any more acquisitions that you're looking at over the next, say, 12 to 18 months?
So, acquisition happens per chance. One really don't know. We keep exploring, chatting. This acquisition of Badshah has come out of deliberations with the promoters for over around 3 to 4 years, building relationship, and now it has happened. So I can't really comment with conviction that we are looking at something. We're continuously exploring and looking at things which are synergistic and which have a strategic fit with the strategy of the company. So as and when something comes up, you'll be the first people to actually come to know. Yeah, but nothing as of now on the table.
We'll have to, try to touch base a little earlier than Mohit, because we have ears on the ground. Mangalam is constantly on the prowl, so hopefully we get a bit of a heads up on that front as well. But congratulations on this acquisition. You seem pretty positive on it. If you're looking at tripling revenues in the next 5 years, I think that's giving us a bit of a sense, and also synergy benefits to the tune of around 100 to around 200 basis points. It's been good speaking to you. Thanks so much for stopping by, Mohit.
And also got us thinking about all the biryanis and, and all the chicken tikka.